Welcome back to Author's Note. For once, we've had some good news in the UK. The economy has grown 0.3% in the first quarter compared with the fourth quarter of last year. With me to discuss what this means is Chris Giles, the FT's economics editor. Chris, what did the data tell us?
Well, it told us that things were better than we thought in the first quarter. Most people were expecting a figure somewhere close to zero. Could have been a bit negative, and then you'd have seen these triple dip headlines, but actually it was sort of quite reasonably in positive territory at 0.3%. Nothing to write home about. This isn't as fast growth as we used to have. We used to be expecting figures of 0.6, 0.7% a quarter, so not very good growth, but things are sort of reasonably looking up, at least in this quarter.
So let's look at the quarterly growth chart, which should show a little bit the kind of ups and downs that we've had over the past couple of years in the UK.
Well, I think if you look at it, you see the recession, those big, deep red bars going down in 2008 and the beginning of 2009. And then you saw a bounce back in the end of 2009 and the start of 2010, which we now know really to be what's known as an inventory cycle. Firms who had been stopping production suddenly realised they were short of stocks and had to make some more quickly. But after that period, all what you really see is some quarters up, some quarters down. It's not really worth talking about a double dip or a triple dip. It's really stagnation, or maybe just slightly better than that very, very feeble growth, with some ups and some downs, with a lot of one-off factors like the big bar up being the Olympics.
Okay, so the big picture is top line growth pretty much non-existent, maybe slightly up. But if we dig down beneath that overall figure, we can see how different sectors are doing, and that shows quite an interesting picture, doesn't it, if we look at that second chart?
Well, what you see on this second chart is really huge differences between the sectors. Start on the left, you see what you'd expect to see in a recession, that the more sectors which are more variable with the economy, the ones that go up and down more, production and construction, production in green, most of that's manufacturing and construction, building services, they really got caned in the recession, as you would expect, more than services which are slightly more stable. And then they were coming back very strongly in the beginning phase of the recovery, again as you would expect. And then what we've seen subsequently is we've seen construction being particularly weak, the yellow line, to the point now it's worse than at the trough of the recession. We know what's going on there. Most of that's public sector construction, so with the squeeze, we're not building particularly schools and hospitals, which we were building in the earlier period. And the maybe more worrying thing is that production, and that's most of that again is manufacturing, has been declining since 2010, whereas services, the blue line, the red line is the overall, and you can see it's closest to services because services is the biggest sector of the economy, is now above the peak. So services has in some sense fully recovered, although it's nowhere near where we thought services would have been back in 2008.
Okay, so clearly two very strong double dips going on there underneath the surface, but at least services, which is a big part of the economy, looks to be growing, and we did learn in the latest data that there was really quite strong growth in that first quarter. Does this change the balance of power now for George Osborne as he waits for the IMF to come to Britain to assess how well he's doing with the economy?
I think it makes it an absolutely fascinating discussion. The IMF came out with quite a strong line. They'd always taken this position that if the economy failed to grow, then he should go slower with austerity, shouldn't be so keen on deficit reduction. And when I was out there last week, when you talked to them behind the scenes, they said, well, what is it that might make you change your mind and be a bit softer on the UK government? And one of the things was what happened to the first quarter data that comes out between they made that assessment in mid-April and the mid-May big assessment of the UK economy. Now these figures are better than anyone expected. It's going to give the Treasury quite a lot more ammunition, because they've already been saying the IMF's not consistent in the way it's looking at different economies. Look at France, look at the Netherlands, they keep saying. Why are you saying that only Britain should change its economic policy? And now they've got quite a lot of ammunition, because the IMF's reason for saying that Britain shouldn't do so much deficit reduction was because private demand was weak. Well, what we've seen in this latest data is, at least for one quarter, private demand was quite strong. And so it's going to make things rather difficult, or certainly very interesting.
Okay, thank you very much for that, Chris. So, positive news for the UK economy, certainly a fillip for George Osborne as he waits for the IMF to arrive. But when you look at it, 0.3% growth, the fact that we see that as a good thing is really a sign of how low our expectations here in the UK have become.